Thank you, sir. So we got a lot to go through today. I'm going to hand it over to Patty to kick the meeting off.
Sure,
Please.
happy to get started.
Yeah, please, everybody jump in when you have questions. It's supposed to be an informational session. So.
Welcome, everyone. Appreciate joining today right after the holiday. I think first order of business is a safety briefing.
So we already performed that in here, but we would remind everybody that's viewing online to be aware of their surroundings and make sure that they have a plan of exit and other safety items thought out up front. So with that, we'll move along.
Okay, number 3 on the agenda, approval of the meeting minutes from our July 11th Finance Committee meeting. Do I have a motion?
So moved.
Thank you. In a second.
Hello.
If anyone could second the motion to approve the July meeting minutes?
I'll second it.
Thank you.
And so, Ms. Dorsch,
Mhm.
so I'm calling a roll
Aye.
call. Yes, ma'am. Thank you. Ms. Bulova,
Here. Or aye.
Mr. Delandro,
Aye.
Mr. Watkins.
Aye.
Thank you.
Okay, item 4, audit committee communication. Oh, I believe we have Rob Churchman here from Cherry Beckert.
Yes, ma'am.
Floor is yours.
Thank you. I just tell you to move slide ahead, or so I was going to add it on my slide also to share, but we can do it this way.
Yeah, Rob, if you just let me know, I'll advance the slides as you go through.
Thank you. And obviously, Steve said at the very beginning, you have a lot to do, so I'm going to be as brief as possible and give you back as much of your time of your day. But under the audit standards, you may have had these presentations at other entities before. We are required to make certain communications from the auditor side to the auditee side at the end of each audit. And they are standard communications, regardless of what type of entity you are, complexity, size, newness, oldness, so forth. So there are going to be things I'm going to say that are going to be not applicable to you. But because they are required across all the standards, then I'm required to positively affirm that to you each time. So you don't just assume if I don't talk to it that I either forgot it or it wasn't relevant and so forth. So if we could go next slide, please. The agenda is pretty much set by the standards, these common areas, and you're going to see some things out here that are going to be like uncorrected, some words that sound ominous. Well, those are the language that the standards require us to use, and I'll point those out to you, and I'll point them out whether or not they are applicable or not. But we're going to go through the results of the audit, some internal control communications, corrected and uncorrected misstatements, and then several slides on just multiple areas of standards communications, ending up with the very last slide, just to give you an idea that there are always constantly changes happening in the general government audit standards, accounting standards environment. And so I always like when I have an opportunity like with those like yourself to let you know what those changes are coming in the near future. Next slide, please. We are a team of who you see here, but there are other people on our team, but these are the key components of our team that serve the authority this year. I serve as a service partner for all services provided to you from my firm. On every one of our jobs, we have a second partner, a quality review partner that reviews our testing and also reviews the financial statements for at a higher level. Sometimes, as you can imagine, if you're working on hundreds of hours of an audit, you can kind of get down in the weeds sometimes. And his job is to help us make sure that we don't get too far or stay too far down in the weeds, and that we're looking at everything from the right perspective. Mike Reinhardt is my returning senior manager, and Brooke Bishop is my senior. Mike is not here today. I told him I would handle it, and Brooke is not here because she just about a month ago had a baby, little baby girl. So I told her, don't worry about it, I'll cover the meeting. Next slide, please. Okay, most important slide of our discussion. We have audited your statements, and we found we issued an unmodified opinion which is a fancy term for clean. You know, what you want to hear from your auditor, that statements are fairly presented in all material respects in accordance with generally accepted accounting principles. Also, because of the nature of some of your funding, there was other standards that we had to perform some compliance procedures over, both government auditing standards, and then also the state has a specifications book for authorities, boards, and commissions that we had to perform some limited procedures on each year and report back to them if we have any findings to report. With regards to overall audit, we did report one material weakness in financial reporting, and I'll talk more about that on a later slide, but it has to do with the recognition of revenue versus deferring it from one year to another. Nope. I just hit the button thinking I was in control. Next slide, please. This is, I should have also stated at the very beginning, I try to make my slide decks useful for people that aren't here. So this is an example of me putting in the definition of control, what a deficiency is, what a control is from the audit standards that we audit under. Again, it's verbatim out of the standards, and it's here basically as a reference point for people that haven't attended one of these sessions before, and also that are not here, but they want to understand what was discussed and what were the outcomes of that overall discussion. Next slide, please. Okay, now this drilling down a little bit more. We have three different areas in our profession that we may cite control systems for. Deficiency, which is a very minor thing, but something you should know. A significant deficiency, which is not a material impact on your operations or your financial statement numbers, but it's probably important enough for someone charged with governance to know about it. And then the highest one is material weakness. That is where a control did not function timely and properly to prevent and or detect a misstatement in the financial statements on a timely basis. And we did report one weakness in internal control over financial reporting. Next slide, please. And that weakness relates to what we have here as a corrective misstatement. We determined during the year working with finance that the deferral of certain revenues in the prior years did not coincide exactly how GAAP is for governments, and so required you to reverse that deferral and bring it into income. And so what that's called in our business, restating the beginning balances, so that you have the earliest financial statement column that is presented shows the numbers that have been corrected. And on the uncorrected misstatement area, we had nothing to report there. We had no other items where we thought you really needed to make a change in order to be in accordance with generally accepted accounting principles. Next slide, please. And should I wait for this person, whoever's coming in?
Go, keep going.
Okay. Getting into what I call we're all of an age where we probably know who the Partridge Family was. This is my Partridge Family slide with all the bright colors, like the feathers used to have on their bus back in the sitcom time. I'm required to talk to you on these four areas because, again, the standards believe that they are important enough for those charged with governance because you're not there all the time. You're not there 24/7. You're not involved in every conversation, involved in every email chain. And so one key thing I was required to let you know is if there are changes made to the policies for accounting and reporting. Your changes that were made were not driven by you. They were driven by changes in the accounting profession. And so this year, just like last year when you had to talk about leases, this year you had to implement the requirements for basically what I call the cloudy stuff. It's in essence exactly like leases, but it's for your subscription-based arrangements that you have, whether it be Microsoft Azure or something like that, where you've gotten into in essence a lease that needs to make sure that you're recording it properly, reporting it properly. Then also GASB Statement 100 put out some further clarification guidance on when there are changes in policies and or error corrections from prior years, again, to try and make sure that entities across the U.S. are doing things consistently and comparably. Next slide, please.
Appointment tomorrow.
I'm sorry, was that for me? Or was that just some background noise?
It was just background noise. Thank you.
Okay, sure. Because related party transactions can be either proper or improper, frankly. The standards want us as auditors to make sure we understand who your relationships are with and do they make sense. And so we look at the relationships that you have. We look at the reasons for those relationships. Do they make sense? Are they part of what would make sense for a proper business model for your type of entity? Are they at arm's length transactions and so forth? And so as our looking through our stuff, our testing and so forth, we found nothing that we thought needed to be reported back to you that you wouldn't already know about who your related parties, relationships and transactions are with. Next slide, please. If you were at an entity that had unusual, uncommon transactions happening during the year, again, because the standards don't assume you're part of every knowledge chain of messages and so forth, that we would have to tell you if we knew of any significant unusual transactions that had happened for the authority during the year, and we're not aware of any of those that would be outside of what your normal transactions would be in what you are charged with doing as an authority going forward. So, but again, I'm required to positively affirm that to you, that there was nothing that looked like it was outside the normal course of business, nothing that I would think would be again unusual or different, significant from what you are charged with doing with your charter in essence and your plan for the future. Next slide, please. Unless you are running 11A stand, every set of financial statements is going to have some kind of estimate. Not everything in a financial statement can be tied to a canceled check or to a signed invoice or to a contract and so forth. So there are estimates made, and I'm required to let you know that we look at those estimates each year because, as you can imagine, this is a perfect example of entities where the standard is the same for a government versus an IBM. There may be instances where an IBM wants to change some estimates to get the numbers in a certain direction. And if they're doing that without support and without a reason for it, then we would be required to look hard at that to make sure that we think our audit opinion is right, and also to make you aware of that. So nothing like that happened here. But again, I'm required to positively affirm that to you. And you have the standard estimate you would have for your type of entity. Depreciation expense is an estimate. You're estimating useful lives and so forth. OPEB and pension, it's key throughout Virginia and well, actually throughout the industry. Those are estimates that, they're done by an outside actuary. They're not done by you. So we look at those to make sure that they are comparable with prior year. We make sure that you're not estimating a return on an investment of 20% when everybody else in the world thinks it's 6% and so forth. So, but we saw nothing that happened here. The estimates were consistent, comparable, not only with yourself, but also with your peers throughout the Commonwealth. Next slide, please. We don't do this for you, but I'm not allowed to ignore it. If we were ever to perform non-attest services for you, and this is common for governments where they have federal funding, and there's a non-attest service that we have to do each year for those governments to help them provide information up to the federal website that can then be used for the feds to budget and manage and so forth. So we have to basically say, yes, the numbers have been sent up by us do agree to the financial statements and so forth. So it doesn't happen to you here, but if there were non-attest services, I would have to make you aware of those. Also, just very, very important slide in here on the right-hand side. I give you five, 6 pieces of paper with my letterhead on it in your big document. But if I wasn't independent, those pieces of paper would be useless to you. So I'm required to make sure that my team, my firm, everybody that works throughout our firm, maybe people that service us, that they're independent of you. And that's also, it's very important to remember that means in reality. So if my wife was your controller, I would not be able to be your auditor, but also in perception. If my distant niece was your AP clerk or something, somebody could say, well, geez, Robin and they're related, so he can't be independent. Whereas I very actually could be, because she's so distant and we don't have any, maybe we're not even full blood with each, maybe we're a cousin of a cousin type thing. So, but again, if those independence matters ever arose, then we could be called into question as to whether or not those pieces of paper I give to you are worthless or not. And so I have to positively affirm to you each year that we're not aware of any transactions, personnel, and matters where we are not independent of the authority. Next slide, please. Now we're going to get into a couple silos here with some ominous words, but they are dictated by the standards. If I ever, and I have clients where, so I'll say the first one or the second column here, I have clients where this page goes for 3 pages because I have difficulties getting information from them. I have difficulties getting them to reply back to me, provide me information, and so forth. That didn't happen here. It's a testament to the quality of your staff there, but I'm required to positively affirm you that did not happen. Same thing in disagreements. I've had clients where they have disagreed with how they're interpreting something and so forth, and we just couldn't get to a resolution. And so I would have to report that in my report, and I would report that to you charged with governance if that occurred. It did not happen here, but again, I can't be silent on it and have you assume that did not happen without positively affirming it. If I ever had to go outside, we did this last year with valuation work. If I had to go outside my core engagement team for some help, say maybe my client has a new pension plan, and I want to get somebody outside my team to kick the tires on their new actuary to make sure he or she or that firm is reputable and knows what they're doing and so forth. I'd have to let you know that I went outside my core team to for that consultation on why I did that. Did not happen here, but I'm making you aware of that. And far right, this is if you've heard me say this before, this is really, really important for the overall standards, because the representation letter is a letter from you to me, from the client to the auditor, representing certain, they're very straightforward matters. Generally, it's between 40 and 45 items, and it's things like that. For example, that you signed an engagement letter with me and hired me to do the audit. That they are your financial statements; they're not mine. They are management's financial statements. You told me about all legal matters. If you had maybe you had a federal grantor come in and check things out, you tell me about that. If you were ever not able to, and this literally is very boring and literally is probably 97% the same ones across every audit firm going. So we're not asking for really off the wall things to be represented to us. But if I ever had a client that said, I can't represent to you on this item or that item or this other item, I'd have to have pause and I have to understand, okay, why? Is there a very reasonable, legitimate answer? Or is there something that you can't represent to me that would impact my overall opinion of your financial statements? And therefore, I'm not getting all the information I need to render my opinion. So did not happen here. Only had it happen a couple times in my 35 plus years, generally because of some unusual transaction that the representation just needed to be reworded or was out of context and so forth, but did not happen here with the authority. Next slide, please. Management consultations. If this happens, never had it happen in the government, but I know of colleagues who've had it happen in commercial worlds, and we call it shopping the opinion. If for some reason management at my client didn't like what I was saying and went down the street to CPA firm A, didn't like the answer they got there, went down the street to C, D, on down the line, they finally found one that they got the answer they wanted, then they would go with them. I would obviously not be your auditor anymore, but I'd be required to make you aware that, I in essence, I saw a shopping of the opinion, and those church of governance might want to understand if there was a reason for that is legitimate, or was it something that wasn't legitimate, frankly, the opposite side. We talked during the year. Steve will call me, others will call me for organization. Maybe they read an article on something, want some clarification. Maybe they, or again, I go back to pensions and so forth. I've had clients who called and asked my help to understand, and they may try a new benefit for their OPEB and so forth. So these conversations happen in the normal course of business. They are my answers or lack thereof are not something that impacts whether or not I'm still hired as your auditor. So, I mean, they're all above board, they're all above table. And so, but I'm required to let you know that we do have conversations throughout the year on various matters. And some of them are purely accounting, and some of them are operational, maybe asking, do I have a peer that has a similar type of operation or similar type of asset group and so forth. The last two of my columns look ominous, don't they? They got some bad words in there. Fraud, illegal acts, going concern. Again, because the standards are across the board and not just for government related, I'd be required to let you know if I ever found any fraud. Now, we are not hired to do fraud unless you hire me specifically to do fraud. I've had clients call and say, Rob, something's not right here. I need you to have a special group come in here and take a look at this. We're hired to be professionally skeptical, is what the standards say. And that means as we're doing our testing, just keep our minds open. If I've lost track of many gray hairs ago, I caught a $1 million fraud in the city of Richmond. It's all in the newspaper, so I'm not telling anything out of school. Because we were testing capital asset activities, and the person who actually was chief of staff for the city council created at least 4 fictitious companies, ABC such and such, XYZ such and such, submitted fake invoices and got paid. How do I find it? Being skeptical. We're going through our sample of activities. This person misspelled the word debris. on every invoice that he did, all the same way, and it just kind of struck out as you kind of weird. You know, it's one of those things. You know, if you audit long enough, some things just pop out to you. So we were skeptical, so we went down the rabbit hole and did, again, eventually found $1 million that he had squirreled away in various places. The nice part of that story is that they were able to get almost all the money back because he was an official in the city council. He was bonded. But again, they did not hire me to come in. They didn't say, we think something's going on, Rob, come in. But I was required to be professionally skeptical, and I was. And then going concern, it really doesn't relate to governments unless they were created like an authority that was created for bond purposes, and then that bond is finally paid off, and then that authority will go away. If I was ever aware of something that made me think that you would not survive for 12 months past your financial statement date, I'd be required to tell you. Now, frankly, I would imagine if we ever got to that point, you would already know about that, because it would be something that would be, dramatic, something going on cash flow wise, or something that causes you to have a debt covenant issues and so forth. So I don't imagine ever that in government that I would ever be me telling you what's going on, that you would probably be coming to me saying, hey, Rob, we got something going on. We need to figure out how to account for this, how to report for it, and so forth. Next slide, please. This slide's just letting you know it's actually verbatim from my audit opinion I give you. I'm just not trying to make you aware that there are things around your whole package that I do not do audit work on, but I do check it and make sure it makes sense. And so, for example, your management discussion analysis, I do not give an opinion on what you say in there about how your year was and so forth. I check the numbers, make sure they agree back to financial statements, I make sure they make sense, make sure I calculate it right, and so forth, but I give no opinion. And then also there's other areas, and depending on what size entity you are, what size complexity of financial statements you have, there are other things like a transmittal letter or a statistical section and so forth, where those information is part of the overall package, but is not something I audit. Again, I just make you aware of these are right out of my opinion. Most of the time, people probably only go through the first 3 or 4 paragraphs, in my opinion, because that's where it tells you, things are up, the things are down from a opinion perspective, and they don't make it back to the second and third page. But I wanted to make you aware that this information is in your financial statements, and what my level of assurance to you is required. That's required under the audit standards. Next slide, please. And just to let you know, there are some changes coming. Most of this one's really not going to be relevant to you, but I wanted to make you aware that it is out there, and also point out a little nuance. This was actually required new guidance, requirements, I actually should say, for both fiscal year, this year and next year. They kind of split it up. Certain paragraphs were applicable for this year, and certain paragraphs are applicable for next year. Really relating to the ones for next year is really relating to derivative instruments, which in Virginia, most entities are not allowed to play with. And so forth. So next slide, please. Then we also have requirements, consistency, comparability requirements. The first time they did something, compensated absence, vacation and sick pay, other benefits and so forth. The first time to really give out guidance on this was, I think I was about 5 years out of college. So we're talking mid-90s. Things have changed a lot since then, haven't they? Benefit packages we use, the terms we use, the length of benefits and so forth. So GASB realized they needed to do a refresh, and so they're giving out some new requirements, new guidance on how to incur the obligation in your financial statements and in your reporting and disclosures and so forth. Shouldn't be overly onerous for most entities. Next slide, please. And that was really my required communications up until those last 2 slides, which aren't required, but I always like to let you know if there's something changing in your environment that could impact you going forward for financial reporting purposes and so forth. Be happy to try to answer any questions, or again, I know you have a full agenda.
Are there any questions, or should we proceed to the 2023 financial statement presentation from Bonnie?
Let's proceed.
Okay, good idea.
So before we let Bonnie, who by the way, I haven't introduced her. She's our Director of Accounting Operations. I don't think she's presented with the Finance Committee, so welcoming her. But I did want to talk about this first slide for a moment. And just, Rob had addressed that we had a restatement, and, we, all 3 of us, Shannon, Bonnie, myself, we, all take very seriously something, a restatement activity.
You can add me to that list.
Excuse me?
You can add me to that list.
Yeah, so there was a lot of discussion when this came to light. And as Rob mentioned, during the FY22 audit, I'll just say I had an error in interpretation of accounting standards, and that's the way we put the financials together. When we were looking at things this year, we took a look at those deferred revenues and that were sitting as a liability. And, this is sort of the technical detail, but basically, essentially, we came to the conclusion that we should have been following GASB standards, and the way we handled this item in the prior year in FY22 was following FASB standards, which is slightly different. The approach we took last year, we viewed at the time as being more conservative and matching revenues and expenses, but unfortunately, it didn't quite follow the standards that we were required to follow. So, long and short of it is, we booked these revenues we received as a liability because we felt we had an obligation to fulfill certain requirements. When we re-examined it, those requirements weren't specified enough to dictate recording them as a liability. Instead, we should have. So we went back and ran those. There was revenue in FY22. Ended up showing as restricted net position. The chart here shows the net impact. So anyway, going forward, we will do a better job of documenting when we have to make these types of decisions, and making sure we put all those documented files together and work with our auditors to make sure we're all on the same page and it's all documented. So with that, I wanted to open the floor. I know I sent an email to the Finance Committee about this. Mr. Church talked about it. I just spoke on it. There's a slide here, but I want to open the floor if there are any questions. I don't want the Finance Committee to be left wondering. And if not, then we will proceed, with Bonnie taking us through this year's financials and giving us the highlights.
Going over some of the fun stuff, huh? All right, so hopefully, if there are no questions, we'll go ahead and talk about the statements. And hopefully everybody had a chance to read this riveting 59-page document that is our annual financial report. I believe Steve emailed it out at the beginning of October to everyone. If you don't have it, you can access it on the web. It is available on our website. But if you would like an email copy, I can email it to you too. Just let me know. You already advanced. Thanks. So first is our statement of net position, which is just a fancy term for balance sheet. So this just gives you a picture of our assets and liabilities and our resulting net position. So fun stuff. We definitely ended the year with $1.3 billion in assets, just over 1.3. It's 1.36, which is an increase from last year, which is great. Our liquidity continues to improve pretty significantly. Last year, we had a quick ratio of about 2.9. Now it's 15.1. And that's really significantly because of that $125 million payment we made to CSX. You can see our current liabilities were reduced by about $104 million overall. So that helps contribute to that. With less liabilities, we've got a whole lot more cash. Our cash equivalents increased by 36% and our investments by over 300%, which that helped contribute to some additional net investment revenue that we didn't have in FY22. So, and as I mentioned, that last installment payment was done. So that intangible asset has been mostly moved off and has been accounted for as rail infrastructure or land. We still have a piece of the I-95 corridor as part of that original CSX agreement for $525 million that we have until the end of this year to figure out what the deeds of confirmation are before we can actually move that stuff out of intangible and into an actual fixed asset. So that's kind of the fun stuff for the balance sheet. Are there any questions about this slide or about the balance sheet in general? All right, cool. Next slide, please. So then our statement of revenues, expenses, and changes in net position, which is a fancy term for income statement. So FY23 was pretty good. Our operating income from passenger rail services covers about 72% of the combined train operating expenses and our costs. That's a decrease from last year, about 9%, but we were operating 2 additional trains last year. So we kind of anticipated we were going to have some additional expenses, right? We brought in about $455 million in revenues between our Commonwealth sources and our funding partners. So that helped a lot and obviously contributed to our cash. And taking advantage of those favorable interest rate environment over the past year, the FP&A team works really closely with the accounting team to understand what our cash needs are so that we can make sure we are holding as much as possible in investments and we can help contribute some revenue to the organization at that ungodly percentage of 3,419%. I think Steve and I calculated that percentage like 4 times each to make sure we weren't wrong, but that is an accurate percentage.
Good news.
I know. It's great, right? FP&A, they kicked some tail this year. All right. Any questions about this slide or our income statement in general? Excellent. Next slide, please. So this is just a breakdown of essentially our major sources of revenue. You guys know, I'm sure, that Commonwealth Rail Fund continues to be our major source. That's a little bit higher this year than it will be next year because of that special allocation that we've been getting over the course of time. And next year, that's not. I'm sure Shannon has already shared with you guys that that's going to decrease over the next year. And then tied for second is other Commonwealth of Virginia contributions and contributions from our funding partners like Amtrak and VRE. And then our operating revenues from our passenger rail services. And there's finances contribution to the organization, all 4%. It's right. We're helping out. Any questions about our sources of revenue or the financial statements in general? Because I know you all read every single page of them. Right? John's smiling at me like, no.
It was riveting.
Good. All right. Well, if there's no other questions, you have a question. You have a comment.
Yeah, I just wanted to say, I think one of the things that we don't necessarily link these strong financials to is we've had really good on our procurements, our large scale construction procurements. I think y'all have heard from us that we've had a really good response. And I think, I've said this several times here and to different groups, but instead of being aspirational that we're hoping to do a lot of big capital projects, we actually have a good solid financial base. And I think hopefully that's helping attract some of those different construction companies to put in bids on these projects because we have been fortunate there. The other thing I wanted to point out too was on our Amtrak train operations, the 72% compared to the 81 the prior year. We're a growing company, so we're still getting our administrative costs. We put in an ERP system, so there's cost involved in getting the backbone up and running. But I do want to say that, Director Stadler has, from the day, I think first day or second day he was here, we talked about having a strong cost recovery for our underlying passenger operations, and he's embraced that. And I do think 72%, we're doing really well there. And this year, ridership continues to grow. And I think we've addressed our revenue issues that with Amtrak, and they've been actually, I'll say it, they've been really good partners working through that. So hopefully we'll see those revenues come around here in the next couple of months, and hopefully the ridership stays strong.
Steve, one question.
Sir.
One of the comments on this pie chart that's up there right now, if I remember what Bonnie said, that the contributions from funding partners were going to decrease. Is that correct?
No, the Commonwealth Rail Fund is going to decrease for FY24, which I think we knew about.
The Commonwealth Rail Fund?
Yes, sir.
How much? Do we know?
About $30 million.
It's in the EDR report. I want to say it's explicit in the EDR report. I can't. So John, if you look there, we do highlight it. We knew it was coming. There was on the top allocation that we got in the first 3 years that stopped this year. So if you look at the EDR, you can kind of track the trend for the Commonwealth Rail Fund.
It's 158 million.
That's right.
The number that we're expecting. And maybe you remember this, maybe you don't, but when they implemented the 2020 transportation initiative, there was 3 years of stepping into implementing all the fees, and therefore the end allocations did not go into effect until 2024. There was some leeway to allow the different modes of transportation, the CTB, to basically make certain allocations. And rail, because we had this initiative going, we were fortunate and got some, so to speak, off the top allocations
Right.
in addition to what we would be normally getting. So.
Okay. CTB, I'm assuming, is looking at maybe trying to reinforce that a little bit and give us a better funding source there.
I don't
want
I don't know. Maybe I'm speak out of turn, but I don't think currently there's plans to change any of those allocations.
Yeah, I agree. This is DJ. That's my sense. They've not given us any indication.
Okay.
We may, a year, 2 years from now, try to seek, they call it a loan from the Virginia Transportation Infrastructure Bank,
Right.
which would be approved by the CTB. But even that's just in Steve's head right now. So we haven't even really approached that with the Secretary's office.
Okay. All right. Thank you.
Any other questions? Excellent. What's next?
Okay, are we ready to move to investment management presentation from Meter Investments?
Yes, I'm going to just give a slight preface here. We've been talking about maybe making a change with our investment manager for, I think, the past 6 months. And anyway, I just wanted to give a little history that when we procured these investment management services, the old ones, it was basically an add-on to our banking services contract. So we really put, because there was three of us here, we were trying to do things as effectively as we could. And we put two different sets of services together. And so anyway, that's how we ended up where we were. And then the end result was we didn't quite get the management that was as active as we wanted. It was more, or at least it felt to us as more passive. And so we felt the time was right. We just talked about all the cash and investments we have. We talked about interest rates have gone up quite a bit. No one, at least I don't know what's going to happen with interest rates coming up. So we thought the time was right to put this back out and get a firm on that would actually be more hands-on with us and more actively managing portfolio. So that's how we got here. We finished that procurement and we've selected Meter Public Funds. And I've invited them to give a short introduction themselves and their firm. And you will be hearing from Eileen Stanek and Jason Zabo. So with that, take it away.
Well, thank you. Thank you, Steve. And thank you to all the members of the committee here for, this opportunity for us to help fulfill the needs of the authority. So as Steve mentioned, I'm Eileen Stanek with Meter Public Funds, Regional Director Advisory Services. What that means is I work with select clients directly, providing investment services, serving as that liaison between the client and our investment team and other resources. So I'm the primary contact for the authority. I've been working with public entities now for 20 years. It has been very rewarding to know that I'm helping to make a difference for each of my clients and the firm's clients as they look to meet their objectives above and beyond investments. So I have with me here today Jason Zabo, and I'll let Jason give a brief introduction to himself.
Thanks, Eileen, and good afternoon. So as Eileen mentioned, name is Jason Zabo, serve as the Director of Fixed Income. In that capacity, oversee our strategy development, ultimately the implementation, then oversee our credit team. And my role expands beyond those direct responsibilities, including a member of our investment committee. I'm a chair of our credit committee, also part of our best execution and trading execution committees. So part of a number of different oversight capacities. I've been in the investment management industry for now 15 years and could almost say, but not quite, been at Meter for almost a decade at this point. So happy to be here this afternoon and walk through our overall process here.
All right, if we could flip to the next slide, please. So just to provide a brief overview of Meter as a firm, next year we will be celebrating our 50th anniversary. So as an investment firm, we do provide services in addition to public funds, but public funds is really the largest component of Meter Investment Management. Back in 1990, we recognized a need in the marketplace for public entities to have independent investment advice, and that, in essence, was the genesis of the Meter Public Funds, and we have continued providing those services now, if we do the math, over 30 years. And today, we are one of the largest providers, independent providers of investment advice to public entities in the country. We're headquartered here in Dublin, Ohio, have a team and a staff that works with clients across the country, and we are happy to be at a point where we have more than 350 public entity clients, so helping a lot of folks. Happy to have added the authority to that list, and we do, this includes assets of over $48 billion of assets under advisement. So this growth that we have experienced over this past 30 plus years really has been a function of what we feel sets us apart. We have a team approach, as exhibited here today with myself and Jason Szabo on the call. Behind us, we each have numerous staff. In Jason's point, on the trading desk and the like. From my standpoint, we also have a full operations team, as well as legal and compliance as well. We also provide, and I think what really sets us apart is providing this customized solution for our clients. We like to get very involved in what is going on within our clients' organizations and put that into the mix as we develop an investment strategy. So if we can flip to the next slide, please. We do provide a very comprehensive suite of services to our clients, which we would provide, of course, to the authority, as enumerated here. As you may notice, we are not a broker and that we do not sell investment securities. And we are really more than just an investment manager who would just invest funds to meet your objectives. And to the building on that, as I had mentioned, we think that's, this cash flow review, which is a critical part of the customization, is really key to our services. So we are in the process of working with Steve and his team to understand really the components that drive the cash flow of the authority. To Bonnie's point, I did look at 94 pages of the annual report. Although I will say I skimmed through the pension liability portion.
Those last 30 pages are tough, man.
But yeah, that just kind of gives you an idea of, yes, we do get into the weeds from that standpoint, because we know that at the end of the day, a big component of the investment process is not just investing the funds properly, but also determining what's that proper balance between cash and investments, because we can't control what happens with market interest rates. We all know that. But we can control how much is dedicated to an investment portfolio, and within that portfolio, how long can those funds be invested? And we think those are two really critical components that are very important to this whole process. Also, as a public entity, we understand the importance truly of being in compliance with your investment policy and state code. Clearly, as we listened here to the audit firm talk about, that importance of being independent from their perspective. From our perspective, it is also important that we are a fiduciary to our clients. And that is where being registered with the Securities and Exchange Commission provides us with that legal responsibility to each of our clients. We also have invested all the necessary into the necessary systems to ensure that we can meet this meeting compliance, keeping the portfolio in compliance with policy as well as state code, so that from an audit perspective, we want to ensure that there would never be an audit notation about the investment portfolio. Of course, though, you hired us for additionally executing and developing the investment strategy. And with that, I will turn that piece over to Jason. So if we could flip to the next slide.
Thanks, Eileen, and we'll walk through really a high-level view of the overall process as we look at the portfolio management framework. And it really starts with portfolio construction. And to keep it somewhat brief and less technical, within the fixed income universe, there's really three ways to structure a portfolio. You could have what is called a bullet portfolio, where you take 100% of your portfolio and invest it, let's say, in a 3-year maturity. Or you could take a barbell approach, which takes half your portfolio, invest it on the short part of the yield curve, and then the other half at the longer end of the yield curve. And then there's the last part, which is a ladder portfolio. And as Eileen alluded to, our vast experience dealing with many different entity types in the public funds universe across the country, our view is the ladder portfolio is best suited to ultimately achieve the three primary objectives: that preservation of principal. That ladder portfolio is structured to have maturities across the yield curve, so inherently has diversification benefits. Next, we have the liquidity mandate. So having regular maturities within the portfolio is constantly on top of the cash flow planning, is delivering additional sources of liquidity as the portfolio ages over time. And then lastly, on the yield side. So with a positive slope curve, being able to invest on the short end to meet liquidity and preservation of principal, we're also able to take advantage of higher yields that the longer term maturities provide. And then, really, as we look at, and on the objective side, is yield is certainly important, and it certainly being a third at Meter, we certainly take an additional step and weave in a risk management approach as we go through this entire process. So in addition to focusing on that yield, we want to manage the risk and have some oversight into how we're implementing the strategy within these portfolios. So we have very targeted position sizes. So as we're looking across the maturity spectrum, we're very mindful of diversification, ensuring we have a number of positions within the portfolio to manage the liquidity and the preservation of principles diversification. Then as we move a little bit over to the asset class side of the house, from our vantage point, we think it's the most appropriate to always look at every entity type's total investable universe across every asset class. We want to make sure that we're using, or at least evaluating, all the permissible asset classes, taking a scope of what's the historical spread and yield relationships, and developing a strategic asset allocation. Then as the markets are evolving and are certainly dynamic over time, as the Fed policy changing, the different points we are in a business cycle, we'll move in between the different asset classes to make sure we're constantly mindful of the risk management approach, but also finding yield enhancing opportunities to take advantage of asset classes that may be cheaper given a certain part of the business cycle that we might be in. Then as we move over to the last two segments of the overall process and looking at the security selection and trade execution, this is where we really get in the weeds on the trade execution side. So as we're looking at all these different asset classes and develop that strategic asset allocation, we really want to get into the bond math about the security-specific valuation metrics, and whether that's looking at nominal spreads or option-adjusted spreads, or looking at the volatility, which is just changes in interest rates that have impacts over callable securities and non-callable securities. The point is, we really are getting into the weeds of the math and making sure we're finding the best value that we can for every portfolio, and not just taking whatever bond that's out there and plugging it into the maturity distribution. We want to find the best opportunity set we possibly can find in every given point of the economic cycle. And then on top of, within that approach is making sure that we're evaluating the primary market. So when issuers are coming to the marketplace to raise funds, we're evaluating that opportunity set. Then also within the secondary market, where bonds are trading on a continuous basis, we're comparing the relative value between those two options. But the most importantly for us from a process and a philosophical approach is this isn't a set it forget it process where we just we invest the portfolio and we just wait till the next maturity comes due, then look for reinvestment opportunities. That's not our approach. Our approach is a continue evaluation of what's available in the marketplace, what's dynamically changing with the economics, what's changing with asset classes. Are there any yield or income enhancing swaps that we could deploy within the portfolio to be more active in trying to ultimately deliver higher income and higher positive outcomes for clients. Then as we look to the last part from, a trade execution, this is where, a number of individuals on the trading staff are really from, again, a firm and philosophical approach is we have access to about 44 direct broker dealers. And then when you look from a technology standpoint, there's a number of different tools that provide other trading venues for electronic trading. And the goal behind having 44 and an additional source from an electronic trading standpoint is we want to create an environment where our trading desk and our portfolio managers are able to look at all the various options on a given day within the marketplace so that we can find, again, the best option we can in looking at all the possible avenues which we can add yield. Then also, and really important, is we want to create competition. So we want to get as many dealers involved to offer a particular security so that we could drive the price lower, ultimately for the benefit of the authority, and ultimately have a higher income opportunity set. Then the last piece I'll touch on is really, I think we take a lot of pride within Meter, and certainly within the public fund space, is the technology front. So the firm is constantly evaluating our technology stack and making sure that we're on the cutting edge and looking at as many resources we possibly can to help, again, achieve those objectives in the investment policy. So we have Bloomberg, which is an incredible expense for really market research. This is where the primary tool that market data is disseminated through. So as these economic releases are happening, we're able to get that in real time. You have a lot of independent research. This is where a lot of trading is taking place in the fixed income universe. Then on top of that, we use Market Access, which is another platform for electronic trading. But the last piece I'll touch on, it's really important from a process perspective, is Charles River. And this is the system where we use our portfolio management and trading is done. But more importantly, because I want to really hit on the risk management side. So as Eileen alluded to earlier in the conversation is, yes, we have independent teams all throughout the organization that has a lot of oversight on what we're doing and how we're going about those processes. So we have a pre and post trading compliance monitoring tool within our portfolio management system, where every time we have a client onboarded, we have an independent team looking at the investment policy, making sure they are taking all the guidelines and rules that are embedded in there, coding them in within our portfolio management and trading software. So as we're trading and looking at opportunities in real time, the system is evaluating all the characteristics of the bonds we're looking to add to the portfolio and ensuring that they're in compliance with investment policy, the state statute, and also any internal risk management rules that we have here at the firm, and making sure that they're in compliance with the portfolio before we go and even execute that in the marketplace. So really some cutting edge technology to, again, ensure risk management is first and foremost embedded in the process, and ultimately compliance is a key part of overall philosophy and how we're going about managing the portfolios across the firm, but specifically for the authority. And with that, go ahead,
Jason.
I'll just say with that, Eileen will walk through a little bit of the onboarding process on the next slide.
Thank you. So basically, as we know, as Steve had mentioned, we were just brought on board here last month. So our onboarding process, our getting started approach from an engagement standpoint, of course, was putting in place the necessary agreements and the like, gaining access to the custody account where the existing securities were held, getting everything set up within our internal systems, and to Jason's point, establishing those compliance rules that will then allow us to start to actively trade the current portfolio. We have had a meeting with Steve and team talking through some observations that we had on the investment policy. So I know that will be forthcoming as we, look to incorporate some updates to the investment policy, again, to align it with our interpretation of state code, as well as ensuring that there's the necessary flexibility within that policy to maximize the investment program. So we know we have a tough act to follow here with 3,419% increase in interest income. But recognizing that, last year that the authority earned $20 million in interest income, one of our objectives would be is how can we ensure that, that income is repeatable and sustainable over the years. And this is where the cash flow analysis will come into play. We have also had a first meeting to walk through the model that the FP&A group has prepared. So starting to get an understanding truly of the cash inflows and outflows expected of the authority so that we can then compile a recommendation for discussion with Steve and his team in regards to moving forward with the actual investment of the funds and the like. So with that, I will pause and entertain if there's any questions from the group.
So our team dedicated to Virginia Passenger Rail Authority, is that Eileen and Jason? Are you our primary individuals who would be working with us?
Yes. In addition, I have an assistant, Gabe Phillips, who serves as a backup to me, gets involved with some of the details at times. So Gabe will also be someone who you may see as well. And then I do report to Jason Headings, who I know Jason Headings would also be a contact that would be available. And Jason had come out to the interview in person. I was on vacation, so I attended virtually, but Jason Headings was able to attend in person.
Okay, great. Well, we're looking forward to working with you.
Thank you. Us as well.
I'm going to second that, Sharon, that I think our team is very excited and we feel confident that this is going to be a good relationship. And we are looking to come to this committee in early January to take a look at that investment policy and some slight tweaks. And then hopefully we can get agreement there and then take it to the full board meeting later in January. But looking forward to getting going with Meter, and appreciate y'all being on the call, Eileen and Jason.
Thank you.
Thanks for having us.
Yes.
Do we have to read the next slide?
No.
We all know it.
All right. Well, thank y'all.
Thank you as well.
Okay, now it's time for Shannon Perry to give us some preview of the 2025 budget process changes.
Yes. I know we're cutting close on time, so I'm going to try and get through this quickly and concisely. So we're going to go through 4 slides here. We are going to talk about the budget process changes, and then we're also going to kind of give you a preview of the management reserve balance changes that you're going to see at the December 6th board meeting. So starting with the changes to the budget process. So this is the 4th time that we've come through this cycle for doing the VPRA budget, and we've devised a different plan this year to make sure that we meet our deadlines, but also have the best data available within our budget. So this first slide here is depicting the changes in the document itself. So as you guys are aware, we do have to submit our capital budget to the CTB by February 1st. However, the VPRA board can approve our budget just before the next fiscal year starts. So we've decided to kind of separate these 2 documents. We're going to take the capital budget, which is going to consist of the capital projects and the capital and operating grants. And this is going to be the document that comes to you all, the Finance Committee, in January, and then approved by the full board that same month. In that, it's important to note that in order to do all of the uses and sources prioritization, we do have to know the operations. So we're going to do an estimate, but the actual operations is not going to be locked in until much closer to the beginning of that fiscal year. So you can see in that VPRA budget column, that's when we're going to have the full budget that comes to the board holistically to be approved later in a timeline. So this will kind of add some more context when we look at this slide. So the dark blue coincides with the capital budget. So we're working on this aggregation now. This is going to be brought to the Finance Committee on the 12th of January. Approved at the January 23rd board meeting, and that goes off to the CTB in February, hoping that it gets approved in March. So that's going to really consist of the capital budget. During that same time frame, we are going to continue to be refining the operations budget, giving us a lot more intel on what the operations with Amtrak is looking like, what does our staffing look like, getting us kind of closer to when that next fiscal year starts, allowing for better data. It's important to note that we may decide to change some of the capital projects as well. Say we reach a good milestone, or maybe we get some positive news on a grant award, we will put that in as well. You'll note that the CTB may have already approved the budget, so we will take any changes that we deem significant back to the CTB in that time frame. But hoping that it doesn't, the CTB will hold as of March, and then we'll come through with the full VPRA budget in the May timeframe. I know that we're kind of deciding whether or not we'll be doing a Finance Committee or one-on-ones, but there will be briefings of the all-inclusive VPRA budget and getting that approved at the June 4th VPRA board meeting. And then that would be the adopted FY25 budget. So just a big change that will help kind of just refine the budget process and add a lot more clarity into primarily the operations budget that we want to institute this year. Can I answer any questions on this piece of the budget update? Hearing none, we can continue on and catch up more time on the management reserve balance. So this is the first time since we adopted the policy that we are kind of doing the update on the management reserve balance. So it captures 2 quarters of updates. So FY23 Q4 and then FY24 Q1. This was distributed in the last month's EDR. It will be coming to the board on December 6th to actually get approved. As you guys will recall, any of these changes have to actually go through board approval. So what you're going to see is all the changes to the sources that have occurred in the last 6 months. So the first one being PAYGO, and then we've got about $33 million of operating kind of related revenue increases. So CRF, surplus in our operations, and then obviously our big grant award that we got for the bypass project. That resulted in an overall increase of about $146 million of sources that we did not previously have in our financial plan. All of this ends up in the management reserve. It's important to note, VPRA staff, we really have the discretion to kind of rewire the sources, but we are unable to adjust budgets. So while there's more funding, we can't come in and change anything. We can't say, oh, this money is going to go to fund Longbridge. That's board only discretion. So we are able to update the amount sitting in the management reserve and adjust the sources. And through that, what we have resulted in is that a majority of this management reserve is unconstrained. It's VPRA fund. There's no strings attached. We can put it anywhere. But through this process, there also is a portion that is the Amtrak capital contribution that has to be put specifically on a project in that capital contribution agreement. And there's 10 projects defined there. So lots of changes, but this is kind of what went into the sausage making. And then the end result that is coming to the board is that we were going to be asking you guys to approve the changes to the management reserve at a total balance of that $269.4 million. I think the key that we wanted to go over here is that at this time, we don't want to take any of this money and put it on a project. We're going through the financial planning exercise. We're going to have a lot of changes coming with estimates as we lock in at 30%. We might have more news from the federal government. There's a lot of kind of ins and outs that we want to be able to account for. So our recommendation is that the board approves it at this balance, and then we figure out what the right level will be as we do the FY25 financial planning exercise. So this is just kind of a snapshot of what you guys are going to be seeing in a week or so. So can we answer any questions on this? This is the first time we've done it. So any recommendations or changes, we're all ears on it.
So Shana, let me just add, and you should never go backwards in slides after 5 o'clock in a meeting, but if you get back one slide, I promise I'll be brief. Shannon said on the right-hand side under management reserve that we have VPRA fund unconstrained $229 million that we can do whatever we want with. And when she says that, she means the board. So this is not something that Steve and I, after this meeting, are going to run around and say, okay, where do we put this? I mean, this is money, as we've talked about before, that we propose to the board what projects you should be allocated.
I'll add, we still have $600, $700 million shortfall.
Correct. Yes.
But I just wanted to make sure there was no misconception that unconstrained means without board approval, because it does not.
Correct.
Sorry.
Correct. We cannot adjust any of those budgets. So
Next slide, please.
next slide. Any questions on this before we wrap up the open session here? Give it over to Patty.
Shannon, I just have one question here. For the goal 291.9, is that based on metrics we approved a few months ago? How
Exactly.
did you
So
get
it's,
to that?
yeah, so it's going to be essentially any unspent budget of 24 plus all future year spends for the capital and operations. So it's defined in the policy how we calculate that. It's just that exact calculation that we will have to update each time. It's really contingent upon what's been spent in the current fiscal year rolling out into what we'd anticipate spending in the future.
Okay, thank you.
And if you've got thoughts or changes to how we present the reserve, we're happy to talk about those, because we want this to be as meaningful for you all as possible. We're continuing to try to be as transparent, no surprises as we can. And if there's a better format, we should talk about it, because this is really for your benefit.
And I'm just going to hit the 5%. It is the word goal, I think, is important. It's not in the policy a requirement. It's a goal that when we do our financial planning, which is constant, we're constantly doing that planning and reiterating the planning. This is a goal that y'all said, hey, 5% is a number that you should be thinking about. It could be that we allocate those funds to cover that shortfall, and maybe we stick with 100 million when we get to our capital budget. So just trying to, since this is new, making sure we reiterate what we talked about back in August.
Understood. Thank you. Okay, any other questions? Okay, I think now is, we'd like to adjourn for a closed session.
Patty, before we adjourn, can
Yep.
DJ, can somebody put together an agenda of what we're going to have before us on that December 6th meeting?
Sure, we have that, and I can send it to you. We actually went through it earlier today to finalize it, and we can send it out within the next 24 hours.
That'd be great. Thank you.
Yep.
And
Certainly.
actually, that was a really good question, because it sounds like we've got a whole lot of.
A lot.
Yeah, it's a big meeting. There's no doubt.
And so let's make sure we have as early a heads up as possible.
Yep, we'll get the agenda out in the next 24 hours.
Okay, but could I have a motion to move to a closed session?
All right.
So moved.
Ready to read the magic words?
Yes.
I move that the board convene in a closed session pursuant to section 2.2-3711A7 of the Code of Virginia for the purpose of discussing and considering prospective candidates for employment and the performance of VPRA employees and independent contractors, and that the VPRA Chief Financial Officer and other necessary VPRA staff attend the closed session. And then we need someone to second that motion.
Anybody?
The motion sounded like we were going into closed session.
Correct.
Yes.
Okay. Second,
Mr. Watkins, did you second that?
I did.
Yes, sir. Thank you. So,
We need a
Ms.
roll
Dorr?
call.
yes, ma'am. Ms. Dorsch,
Aye.
Ms. Bulova,
Aye.
Mr. Delandro,
Aye.
and Mr. Watkins.
Aye.
Thank you. So anybody that is not on the board needs to leave, please. That will mean signing out. And then let me ask Jason to cut the stream.